FPL also. I've played 3 or 4 seasons before I decided not to play it because it was becoming so addictive. I had to stop. I think there are a lot more entrepreneurs that need to be funded than are funded today in India. They become good at different points of time, and people who may appear good at the beginning may not actually build large outcomes, and people who don't appear good to be in the beginning may build large outcomes. That's where alpha comes from. I think more people in India should get a chance to start a company. India is this very strange dynamic where you're both overcapitalized and undercapitalized, where few companies get a lot of money and a lot of companies get no money. I think YC is legendary as a venture fund. The way they've looked at investing and enabling entrepreneurs globally, I don't think there's anyone who compares. And they've done so much innovation. Like they have an innovation stack. Like going back to the book, the standard deal, standard terms, the safe note, the community.
What your vision is long term?
The dream is to be India's largest pre-seed fund, do the most number of investments. I think at least in the forecast that I have with our investors, we're trying to probably do 80 deals in a year by year 10.
Hello, everyone, and welcome. In today's episode, we have Aviral, the founder of a junior VC and now the managing partner of the junior VC fund. The last time we sat down to do this, Aviral, was 2 years ago, and a lot has changed since then. We didn't even have the rapid fire section back then, so let's just jump right into that. Let's do the rapid fire like we usually do with our guests. And for those of you who are tuning in to this episode and haven't checked out the last one, the link's in the description below. Aviral, let's jump in. If you could be a profession in any other field unrelated to your current work, what would it be and why?
I think I would be a football manager. I'd love to manage Manchester United if I could. That would be definitely something I want to do.
And why Manchester United?
I've loved the club for a very long time. It's unfortunately fallen on bad times for the last decade or so. But when you commit to something, you stay with it. Unfortunately, now half of the time I've been a United supporter has been problematic. But even if not United, I'd love to manage a football club. In fact, when I used to play FIFA, I would play manager mode more than the actual game. So I really love it. FPL also. I've played 3 or 4 seasons before I decided not to play it because it was becoming so addictive. I had to stop. I think we also played a few seasons together.
Yes. And when did you start following Man U?
2000,
Okay.
just 99 actually, specifically when they won the treble. I was probably like 7 or 8. My dad introduced me to the club.
Nice. Yeah, I think those are the memories that stick with you. So your favorite AJVC article? And you have to pick one. There have been many.
Uh, that's a hard one. It's like you have lots of kids and you have to choose one. I'd say the carrot lane one. It has many reasons as to why it's my favorite, but also because I think it was an undiscovered gem very really, and it was like in plain sight, and really enjoyed covering that. And obviously, a lot of things emerged out of it, um, but that's I think that's my favorite.
Nice. Good one. Would not have. But last book that impacted you deeply?
The last book that impacted me deeply. I read so many books and I'm impacted by so many other. You can see. Um, I think the one I really liked, which I read recently, is this one called the Innovation Stack. It's written by the founder of Square, not Jack Dorsey, and I think it's insanely good. I was so surprised to find it. There are some really good principles and thinking on building companies in that book. I think the key message or the key concept is that if you are building a company, there are many things that come in together, which individually might seem small, but when you put them all together, like 12 or 13 of them, they become a stack, which makes it very difficult for anybody to compete with you. And these small things which are customer first and probably related to each other, like one resulted in the next. And he explains why Square had that, and also companies like IKEA. So the self assembly, the food in the stores, etc., they're all interconnected and they form a stack. I think it's fabulous, and it's a great book. It really changed my perspective, and intuitively I feel like we're doing a lot of it at AJVC as a fund. So it's also good to like see that mindset, and also he talks like an entrepreneur. You can relate to it a lot.
Moving on to the business section of VC that you look up to.
I think that would be Ashish Gupta of Helion. He's, I mean, I know him personally as well. So it's not like a distant, person. He was actually one of the first few people I spoke to before entering venture in maybe 2016. Um, I think he saw a lot of trends in India and in global tech much before other people did. He was also, I think, one of the first people to build a really large scale homegrown fund. Like he had raised about 400 or 500 million in the early 2010s, which is just incredible even today. I mean, and then it's just unheard of. He's also an angel in Flipkart and so many companies. I just love the way he thinks, and he's very first principle. And I think his process of investing is more process than just saying that, oh, I found this interesting company and I invested in it. I subscribe to that belief. So he's fantastic.
Uh, Building on that, favorite question to ask founders before you write a check.
Hmm. Hmm. I have so many favorite questions. Um,
You can give us multiple for this one.
yeah, yeah. I'm thinking. I think what have you learned recently is a very interesting way to, firstly, like learn yourself, because I learn a lot from founders, but the really special founders will definitely teach you something. Like it'll be really out there, like a very interesting concept, but you may have not heard of it. I like that. I like to ask teams who's the CEO. It's a very uncomfortable question, and there are very few teams who actually say that I'm the CEO. Especially at the earlier stages, it's always like silence, and then we are figuring it out. Especially like in young teams, but I really like teams where the roles are defined, because what I've seen is many teams, they scale culture, like almost every startup scales culture from the beginning, and if role clarity is not there at day one, it will become even a bigger problem at on day 10. Um, so I think that's the second. I think the third is, what are the reasons your company fails? And you get very revealing answers from founders in terms of how they're thinking about risk. And founders are actually not people who take blind risk. They actually understand the risk and mitigate it, or have a path to mitigating it. And I think it's a good question to understand how founders are thinking of risk. But I ask a lot of questions. Like I have a questionnaire, but I would say these three give like all very high variance of answers. Like you'll get a very high variance of answers in this.
Nice. So good ones. This one we've asked several of our guests, so you know what's coming. What's one truth few people agree with you on?
I think there are a lot more entrepreneurs that need to be funded than are funded today in India. Um, a lot of people and a lot of investors actually say that there are only so many good founders, and the rest are not good founders. I think that concept itself is flawed. I think being an entrepreneur is a journey. Many people start at, they become good at different points of time, and people who may appear good at the beginning may not actually build large outcomes, and people who don't appear good to be in the beginning may build large outcomes. That's where alpha comes from. I think more people in India should get a chance to start a company. India is this very strange dynamic where you're both overcapitalized and undercapitalized, where few companies get a lot of money and a lot of companies get no money. And I think very few people agree with me on this concept that more people need to get financed in India. I think more people need funding.
That makes a lot of sense. And so, what's new with the junior VC?
Mm. So it's been an evolution, and Mazin, you've seen it, and you've been very kind to support on this new journey as well. Um, we've been doing this for a while now. At least when I started AJVC, that was 2018, mid 2019, early. It was just a newsletter. It became a blog, then a website, then a platform, and now it's a full-fledged fund. Um, we are investing out of our first fund, which should back a lot of companies, like lot meaning 30, 40 plus, at least over its 3-year life cycle. The eventual idea is to build India's largest pre-seed fund, where many entrepreneurs are given a chance to start. And there's I would say, a big gap in India at that stage. Generally, very few funds have the infrastructure to operate in that category. Um, and it's a very large market because about 1,000 pre-seed deals happen, and pre-seed by definition is less than 2.5 crores from a check size. They only 10% of those are done by the largest pre-seed funds, which means it's very disorganized, and the maximum returns are actually driven from that category. Obviously, death rate is high, but the returns are just insane. Like, you could get 1,000x or 2,000x also from an investment perspective. So it's like that classic category in which a venture investor wants to invest, which is large, profitable, and disorganized. And I think we are going to be playing there.
And talking about the infrastructure, why is that a challenge, do you think, and how do people go about tackling it? What's your
So,
that comes?
so people look at venture as craft and artisanal in some way. Um, I think fundamentally, if you try to do that in pre-seed, you have gut-based investing and your instinct drives investing, then the person becomes a bottleneck in some sense. And you need to have some sort of leverage, which is either many people or technology. I think fundamentally now, with so much more access to private market data, with so many companies that have come up, you can actually feed this data and start making decisions as a person supported by technology, um, rather than being a person and a lot of people along with you who are trying to make that decision. Now, what happens is that if you're trying to do purely human based investing in pre-seed, you'll have to have a really large group of people, like let's say 20, to cover the whole pre-seed market, because there's just so many companies that are worth meeting. But if you use technology as leverage for yourself, that team suddenly becomes much smaller. You don't need so many people. And we're trying to do that at AJVC as well, where we are leveraging tech to enable us to make decisions faster. In fact, you won't even believe it that the first stage of founders are given an answer in 32 hours, not 32 days. A lot of founders replied to me to that email saying that, wow. And you can check out the testimonials on our program page, that we don't even get responses, and if we get responses, they come after a month. I cannot believe that you gave a response in a day. And it's not that they want a yes, they just want an answer. And what that means is you're treating the founder with respect for their time. A lot of venture investors say that they're founder first, but they just don't respond to founders. And we are trying our best to respond to almost everybody. Till date, we've got 3,000 applications. You can understand that volume is huge.
30
But
hours
I would say that,
on 3,000 applications.
yeah, but I would say we've responded to 100%, almost 100% of them with an answer. Um, and the more time you spend with us, the deeper the feedback you get. That is also something that we are doing. In fact, if someone comes to the final stage in our process, they will probably get an essay from me. And and one founder actually replied, it's a very short response but very hard hitting. This is the Hi Aviral, this is the longest reject note I have ever received. I cannot believe how much time you spent writing this. That is that makes you feel really good. So we are trying to change the game and give feedback to founders as much as possible. Obviously, some things are not feasible, like giving almost everyone feedback, but we try as much as we can.
That's incredible. I mean, and that's really it's a different approach to a traditional old school problem that people have tackled by throwing people at it. And um, I just for the people who are interested in breaking into VC, I know a lot of people are looking for analyst positions. What is your advice for them? Is there still scope to break into VC as entry, especially early stages like you did back in the day, or
Right.
is it changing? Is the landscape changing?
I think it's much more uh, open as an industry today. I think when I joined as an analyst in 2016, there were probably like 10 venture funds. Probably. I don't think there were even those many. Uh, Today, there may be 50 or 60 pretty easily, which are very active. I mean, you can say there are much more
Yeah,
venture funds. It's a long tail. So the number of positions open are much larger. Also, the funds have become bigger. So the AUM, I would imagine, is probably 10x or even more, 20x of what it was when I started. So I think getting to VC is definitely, from a demand supply perspective, the supply has increased. But I would also say demand has increased because it's now become sexy and cool. Uh, when I had begun, people are like, "What is this VC thing? And what are you doing?" So I think I was early to the market in India, and a lot more people who want to get into venture. And I think there's scope. There's definitely an opportunity. I think it's a very fascinating career choice, and you get to work with really smart people out and out.
that's good advice. And so coming back to the Junior VC fund, what is the value proposition for startups and on the other side for investors?
As a fund, you're in the middle of like LPs and founders. You have essentially two groups of people who you are in service of, in some sense. And I think for what a founder really wants, and this has been a learning for me as a journey over the last 8 years, that they want capital and they want the answer quickly. So speed is a value proposition. Uh, if you can if you can give capital at speed, people will come to you. It's like, I mean, it's the same old story. You look at any product or service, you want everything faster, right? And um, I've been fundraising as a fund manager, and I know how uh, long, laborious, and emotionally draining it can be. So founders want to minimize fundraising as much as possible. Um, so they want to, just raise money and get on with it, right? So for the founder, speed of capital is important. um, Founders are looking for people who are empathetic and can guide them. Founders are looking for people who are transparent and honest, and they want to work with really interesting partners. I think these are like three or four things. So the last part is probably a brand in some sense. I think for us as a fund, we are trying to offer all of this. Like I alluded to earlier, speed of answer. We try to give you a yes or a no if you go through the entire process in less than 3 weeks. This faster than anyone in the ecosystem. And it's not like if there's a particular founder whose deal is hot and a lot of people are chasing, then you give an answer in 6 days. Otherwise, you take 60 days to give an answer. I have seen this happen because FOMO drives the industry. Everyone gets that. Like, there's no discrimination between founders based on heat of the deal. It's just a, the process is followed for everyone. Everyone is treated the same way. And if you keep clearing stages, you will be told at every stage that this is done. So speed of answer is critical. I am involved personally with every company we invest in. I'm not handing it over to someone who doesn't have my experience or my vantage point. The third is we are giving the founders access to 500,000 people who are in my audience, and there are so many people who are founders in that particular audience. Um, and finally, I think people probably want to work with me because they may have seen me and some sort of learning, and there is some good karma with it. I think these four combined make a very interesting value prop for founders, and especially for people who are starting for the first time, perhaps.
There's a lot that goes into starting a fund. So can you tell us a bit about what happens behind the scenes? Uh, what was the administrative process like, and how long ago did you start even thinking about setting it up?
I've always harbored the thought of starting a fund, to be honest, but I really acted on it in, say, about May of this year, when I decided to start on my own. Um,
5 months.
there's a lot that goes on. Yeah, it's not even 5 months. It's
Yes.
like 3 or 4 months. Um,
I think that's
it's
compressed
been
timeline.
rapid.
Yeah.
Compressed timeline, correct. So generally, when when you're fundraising, you have to find LPs, you have to set up a structure and things like that, which take more than a year generally. Um, you can very easily assume that if someone's starting a fund, they'll take 12 months, and if you are starting a fund for the first time, it's probably going to even take longer. So there are two components to what is in the background. Like, the founders will obviously see you, but then what is happening at the back end? I think the first is LPs and fundraising from people, and the second is setting up the administration to run a fund. Now, when you start a company, all you need to do is incorporate a private limited or a LLP, and that gets done in 21 days. And then you have some compliance, and that's about it. But if you want to start a fund, man, it is not that simple. So you need to have, at least in India, you need to have a trust, you need to have a manager entity, you need to have a fund, you need to have a sponsor, which generally can be the manager entity or different entity. So you have like four entities that you have to set up. You have to get approval from SEBI. So we are a category 2 fund. We had to get approval from SEBI. In fact, this year there was an exam that the main fund manager, who's a GP, it's only for GPs. You cannot like hire somebody to take the exam for you. Only GPs can take it. That you have to pass, and it's not easy. uh, I've had people who have failed, and I have had people who are like in their 50s and just complaining about the exam. I thought it was interesting. I love exams. Uh, but it still is a new thing, and the SEBI approval can take anywhere between 2 months to 3 months, although we got our approval in 40 days. um, and you need to get this infrastructure set up. So once you've got the approval and you have the blessings from SEBI to run a fund, you have to create these entities in parallel. I mean, with the process before applying, you need to have this all set up. Then you need to have tax people, you need to have a lawyer, you need to have folks for compliance. So getting this entire thing set up itself is both time consuming as well as costly, which is not the case in terms of if you're starting a company. So that's one part, the fund administration. And it's a very involved process. I mean, there are a lot of regulatory requirements that that you need to have. The second part is fundraising LPs. Um, I'd say that's quite hard. I mean, this is something you can pay and get as a service. Obviously, the regulation and the approvals are not something you can predict. You have to wait and fulfill the requirements. But fundraising is a different ball game, especially if you're doing it for the first time. You need to have um, LPs will back you. You need to have strategy. You need to be able to convince them that you'll be able to run a fund. It's very much like a sales process. I'd say like you have a funnel. There's a top of the funnel. Somebody will get introduced to you. Maybe they're interested. Maybe they're not. Then they'll do a call. Then you do a few calls. And somebody will be like, "Hey, I like what you're doing." Then they'll sign an agreement. It's a long run process as well. The interesting thing about LPs versus VCs for founders is that us as VCs, we have a timeline in terms of when we have to deploy, because a fund has a life and we have to deploy in a certain percentage of that fund life. LPs don't have these deployment pressures. So they can sit on the decision not for months, but for even years. I've had conversations where the LPs like me and they say that we will want to engage with you after 1.5 years. That is just like
Really?
incredible. Yeah, like when you're raising your next fund and when you're wanting to um, deploy more capital, come back to us. So this is not what you would see as a founder usually, and in this case it's not a no. I think when VC say that, generally it is
You know,
kind of a soft
exactly.
no.
You know, this
but
guy's
the but the L, yeah, but the LP is actually interested. I mean, they're just like, your fund is too small for me today, come back later. And you also can't say that, oh, my round is closing, etc., because you're raising a pretty large chunk of money. So it's a very different process. And if you've never engaged with LPs before, it's completely new. In fact, 100%, or not 100%, but 95% of the LPs in the fund are people I did not know before I started the fund. So it's all new people, which I think is both interesting and a little intimidating as well when you start. So you have this administration part and you have the fundraising part. These two are what go on the back end for a fund manager, and they're both continuous in some sense.
no, that is a really helpful overview. And what about marketing the fund? Did you do any kind of marketing for Junior VC?
Uh, Generally, people would hire a distributor or a wealth manager or somebody to do it, and they take distribution fees. We've been working on AJVC for so long, and I've been writing on LinkedIn for so long, that itself is an asset. I think 100% of our LPs have come from LinkedIn. So LinkedIn has been the distribution source. So if you get introduced to one LP, if they like you a lot, they'll introduce you to their friends. It's a very interesting dynamic where they move in packs, in almost like wolves. Where there's one person who's like influential in the group, and then he or she will introduce you to his or her friends, and then they'll all invest together. So it's a very interesting dynamic which I have seen. The other observation for me is that the real money in India is in Bombay mostly. Uh, Bangalore has a lot of founders for startups, but wealth has been created here. It's why the number of billionaires is disproportionately larger, and the number of families that have that net worth. Because at the end of the day, to invest in venture as an asset class, you need to have a lot of liquid net worth. A lot of founders have actually paper net worth which they cannot liquidate, except maybe the ones who've gone public or have had some secondaries. I think the only ones who can probably invest in a VC fund are ones who have gone public. So it's a very interesting dynamic in terms of where LPs are as well. I'd say Bombay number one, Delhi number two, Chennai number three, maybe tied with Bangalore, and then Pune. These are like your areas of LPs. An interesting trend I'm starting to see is a lot of smaller cities which have family wealth, maybe in steel or mining, etc. They are also starting to look at venture as an asset class, because you've made a lot of money probably in the public markets, and they want to diversify.
Makes sense. I think what's surprising for me is that most of your LPs you didn't actually know before, which is
Yeah, yeah, yeah. Well, I would say it's higher than 95% probably. But I'm just being. So I didn't know most of my LPs.
And so, I wanted to ask about one thing. Specifically on your investment structure, a lot of people talk about early stage investing, and YC has made the safe instrument quite popular. So maybe you can explain what that is and what are your thoughts on it, and how do you plan to structure your deals?
I think YC is legendary as a venture fund. The way they've looked at investing and enabling entrepreneurs globally, I don't think there's anyone who compares. And they've done so much innovation. Like they have an innovation stack. Like going back to the book, the standard deal, standard terms, the safe note, the community, the distribution, they all go together and then they just become unbeatable. And then you have, all these small things like Bookface and their forum, which is Hacker News, and so on. All of them together, you call it a flywheel or something. I think the stack is a nice way to do it. They all just fit into each other, and you can see that they were answers to problems. Yeah, they were answers to problems that emerged when YC was getting created. They created the standard node because they wanted to make it transparent. And they're like, oh, how do we execute the standard document? So they innovated with the safe. I don't think YC created, but somebody worked with YC to create it. Then they created a community because they wanted to engage with founders and so on and so forth. Coming specifically to the safe, so the safe is a one pager which just outlines key commercial terms. There is barely any legality involved in it. It is what they call a convertible note, which is it's a debt type instrument that converts into equity when the round is priced, which means that the company has a valuation that gets determined at some point in the future. So what this does is it removes the negotiation and the discussion and the inefficiency in closing the round and pushes it to later. So it makes the round being able to close very fast. And there's definitely benefits with doing that. And I think I have a slightly differing view to it in how we are operating, and that's why we have a different structure. There's a very nice article by Fred Wilson of USV who runs a blog called AVC. That's how AJVC actually came. Um, the article's called Unsafe Notes, and he talks about how safe notes are can be dangerous for startups. And the reason is twofold. One is you actually don't know once you start stacking safe notes on top of each other what the final effective ownership is. And the second is you are kicking down the negotiation can to a future point which you don't know when it's going to come. And I agree with both those points, right? I think fundamentally transparency between a investor and a founder should happen from day one. And they should negotiate. It is good because then they get to know each other, they get to know how each other, how you think. The amount you learn about a person when you negotiate with them is not even funny. Like you learn a lot about a founder. And I think negotiations are actually good. Good relationships are built on negotiation and being able to put your point forward and be comfortable with friction, because people are not, don't start with being joined, like the fit. Everyone has to like figure out what the other piece is. And in a business relationship, negotiations are critical because then you start to respect the other person, their point of view. And if both parties feel like they got a good deal, that's amazing.
But it also tells you a bit
So
about how that will be with their own customers and vendors, and so
exactly, exactly. So when you're fundraising, you're nice. When you're wanting to deploy, you're nice. But when you start looking at, hey, I want to protect this, and hey, I want to protect this, then you see how the other person operates when they're not selling. Uh, so I think that's very important. That's critical. Um, but we've done a few things to at least minimize the length of the process. Obviously, we don't want to elongate it and make it a elaborate dance. We have a standard deal. We give standard terms. Everything's transparent. Once you get a term sheet, you know what you're going to get. The documents are also quite um, short, and just very key points. So they set the company up for success, but they also ensure that everyone's aligned on what's expected.
No, makes sense. I think that's quite an insight into why one versus the other and why you structured it this way. Appreciate that. But where do you see AJVC, let's say 10 years from now? Can you tell us what your vision is long term?
The dream is to be India's largest pre-seed fund. Um, do the most number of investments. I think at least in the forecast that I have with our investors, we're trying to probably do 80 deals in a year by year 10, which is insane. It's like three times as much as the maximum number of deals done in India by a single fund today.
That's more than
So
1 week.
so
That's
yeah, absolutely. And just for context, YC does 400, so that's that's eight a week, one a day, right?
yeah,
Um, so they've built an entire machine and engine to do it. Obviously, they are definitely using technology to a very large extent. They've not talked about it that much, but to be able to process this volume with the team they have, obviously they have much larger number of people than AJVC today. Um, but they are definitely using tech, and that's how you get leverage. If they can do 400, I think 80 is, while ambitious, I think in 10 years time it should be possible.
and the last question, which we ask all our guests, what is one piece of unfiltered feedback? Maybe more recently.
That I've received.
Yes,
Mm.
yes.
Yeah, I think I got this feedback from one LP who committed to us. I don't know if it's unfiltered, but it really took me by surprise, because I thought that was a strength. And the LP told me that, Aviral, you're underselling yourself. And I was like shocked, because I thought I do a good job. Uh, he's like, the approach you're taking is so different, and you're so conservative about it when you talk about it. Be more confident that you are trying to do something that's really different, and you've already made a lot of progress in that. So essentially, I think what he felt was that I was a bit tentative. Um, and he said, like, when you write and all, you're very, very confident, but it's very surprising that you're underselling yourself when you've done so much good work with your fund. So that was interesting. I think it was unfiltered. It was some sort of praise as well, but I mean, I didn't take it as praise. I think it was feedback. And I think when you're doing something different as a founder, there is that um, thought of being, maybe I'm not doing the right thing, and maybe this is too ambitious, or too different. I think that kind of plays on your mind. So maybe that had a factor, but I'm not doing that anymore. I'm pretty confident now. So that was one piece of feedback I got.
Just to close it out, and I think whenever you're trying to do something ambitious, there's always that sense of self doubt and that question that will this actually work out? And
Correct.
has that thought gone through your mind, and how did you overcome it?
Of
I
course, of
think.
course. That's the reason why I got that feedback, because self doubt was very clear. um, how you overcome it is, I think you have to just uh, translate it into action and maybe outcome. So when you start to see your vision take life, like, I got a lot of confidence the day we launched, and we got like 1,000 applications in 3 days. That was a huge boost. Like, it was insane.
How
I
did
did not expect it. I, I, I had thought that we'll get like 1,000 in a year. Um, so things like that, right? These things, they all stack up together, and you have to keep trying, and don't be deterred by failure. Another, LP told me that don't stop, keep going. It's very good advice. Because there are a lot of moments when you feel like, what am I doing? And you just got to keep at it. um it's a very enriching journey, but it can also be full of questions to yourself and doubt.
We could keep going, but that's a great note to end this discussion with. Always keep going. I think that summed up the entire AJVC journey from
Yeah.
just you writing emails back in the day to people, a website, and like
Yes.
fun. Thank you everyone for tuning in. We'll see you next week.